Hello, everyone, and welcome to the live stream. I'm so excited to be here. Amazon earnings, and we are 30 minutes away from the closing bell. And Amazon is currently uh, trading around $3,400 as we speak. Should be a very interesting earnings report. Let's go through the news, see what we have right now. Is there a bullish sentiment on the stock currently? Let's see. So there's an article here. To split or not to split? This article is about, is Amazon gonna split their stock? So for those of you who don't know, Amazon stock is a very expensive stock. So $3,400 is not an easy stock to buy if you don't have the option to buy shares in kind of like, just parts of shares. So if you can buy parts of shares, then it's hard to own, to just dive in to buy each time one full stock. So maybe Amazon's gonna split. I don't know. I believe if they're gonna split, the stock will go higher. I don't see a situation where Amazon splits and the stock doesn't go higher. So fractional shares is one way to buy Amazon stock today. If like you don't have right now $3,400 to buy a stock, but if they split, maybe less people need to use fractional shares. If I would split, I'd split the stock by 10. I would make Amazon a $340 stock, and here are the reasons why. One, it still puts them in a position which is higher than most companies. Like, it will put them in a position where it's more expensive stock than Apple in 340, and it will be more expensive than Facebook. So that's why I like 340 as kind of a price point. So that would be a split by 10 if they split. Let's see what else there's in the news before we hit earnings. I'm gonna try to tinker with also the quality of the stream later. Let's see what we have here. Okay, so more than 500,000 Amazon hourly workers will get raises, which range from 50 cents to $3 an hour. I don't know if anybody followed in the news lately, but there has been an attempt to create some kind of organized workers, like Amazon employees try to organize and create a union, and the working union didn't pan out. I think it happened in Georgia. And it seems that Amazon, right before earnings, talking about increasing 500,000 employees. That's a lot of money. And if I have to bet, this is probably due to the latest pressure. Amazon spending over $1 billion in incremental pay for the employees at its logistic divisions. So that's interesting. What else? The company said that the other teams are continuing their regular annual compensation. What else? Amazon earlier this morning courted controversy over the issue of workers needing to pee into bottles. Oh, well, that's not a good look, Amazon. Not a good look. Let's continue. Okay. So the straddle prices. Okay, so let's talk about options. So there are people who are betting on Amazon's earnings today using options, and one way to basically understand how volatile a stock is, what is the expected movement after earnings. So, in terms of options, the expected movement is around 4.5%. That's what people are expecting the stock to move. It's according to the option. So if I jump really quickly here into Amazon's options, there we go. And I'll go on April 30th, which is tomorrow. I'm on Apple. Let's move to Amazon. Okie doke. And I would sell a straddle. So basically, you can't really see this, but it's an implied move of $140 up or down. So that's the implied move, according to the options market. So that's just kind of what the straddle is all about. And some people are buying the straddle if they're expecting a bigger move, or selling the straddle if they're expecting a, I would say, more kind of tight move. Okay, let's look at the chart of Amazon. Let's see how it's looking. Trying to look at the monitor of Amazon. All products, active trader. Okay. Let's see what we got here. Stock is currently trading around 0.4% above what it was at the opening. It's kind of hard to see with the... Yeah, there we go. So just so you can see what's happening here. And for those of you who don't know, you're joining Amazon earnings. And let's see, maybe we should create a better... Let's create something better here than we had before. Let's do this. Amazon. And the word earnings. We're going to see what I'm cooking up here in a sec. Okay. And let's save this. PNG. Transparent background. Okay, this should improve a bit on what we had before. You're going to see it in a second. Much better. Okay. Much better. So let's go back to the newsfeed. see what else we had here related to today's earnings. Okay, so let's see this. HBO Max, $9.99 ad-supported streaming service, or is competing with Amazon Prime, and HBO Max without advertising costs $15 a month, which is the equivalent of what subscribers of the company pay TV premium bundles pay. What else do we have here? When our customer chooses to buy ad-supported product or to buy the straight subscription product, it's assertive the same way as business said the executive. Why is this important? I think it's important just because Amazon has Amazon Prime, and I think it's related. Let's see here. Okay, nothing about Amazon Prime. Jedi Cloud Computing Contract. Okay, this is the Pentagon contract, for those of you who don't know. So, some Pentagon officials have suggested in recent months that the Defense Department might have to consider other approaches to obtaining enterprise-level cloud services rather than pursuing further years of litigation. Yeah, so those of you who don't know the story, Amazon blamed Donald Trump for losing the Jedi contract to the Pentagon. So, long story short, it seems that Amazon are not giving up on this. So, pretty much the story regarding the Jedi contract. Okay. What else do we have here? So we talked about the hourly rate. Amazon pulling forward pay reviews for delivery. Amazon will pull forward some annual failed pay reviews, the company says. Okay, nothing crazy. In the news before earnings, just Amazon increasing the wages. That's probably the biggest news. And this share spiking higher following comment from chair. Amazon will be company's largest customer on its network. Okay, well, that's interesting. So I'm stuck on the split kind of I would say speculation. If Amazon does split, I'm assuming that what happened to Tesla and what happened to Apple will happen here. You're gonna see the stock rip higher. There's no other way for this to play out. You're gonna see, if this splits by 10, I think Amazon splits into a $340 stock, and then they turn into a $500 stock. I don't see any other scenario playing out, to be honest. I just think that the stock is currently expensive for the retail buyers, and I think it's I think it's worthy to note that not all brokerages have the option to work with fractional shares. I have on Schwab fractional shares, but I don't have on TD Ameritrade fractional shares. You have on Robinhood companies with fractional shares. You don't have, according, if my memory doesn't betray me, I think Fidelity does not have fractional shares. So, just kind of like thinking about what fractional shares would probably do to a company that doesn't have, it brings in so many investors, especially if the stock price is high. So if a split, which is like the easiest way to help people start joining the party of owning Amazon stock, I think a lot of people just miss the stock. And I think those people who missed the stock are disappointed they missed it. And I can totally relate. I missed a lot of Amazon's upside. I only started getting in around the $2,200. Um, I did a video recently about how misleading was the price to earnings as a metric that people should have given attention to over the years. Like, I feel that a lot of people saw high price to earnings on Amazon and kind of missed the boat because of that. Just to kind of jump in here and see what is the price to earnings on Amazon right now. And it is 82. 82, almost 83. So the price to earnings on Amazon is almost 83. That is a lot. And that is a very that's expensive stock. Like I was talking yesterday on the live stream how Apple was expensive at 36. And 83 is expensive. Like, I promised viewers who were here last time on the Apple call, on the Facebook call yesterday, that I would show you something very interesting about basically how this stock started ripping. So we hit the charts again, and let's try to go back a bit. Let's zoom out. So you can see the stock has been already around the last 3 years in a very high place, and it kept growing. And you can see here on this specific chart what was the situation 10 years ago, but this is already a period of time where Amazon has broken down the AWS revenue. And the AWS revenue is very important because this is what drives the company's ability to continue to lose on all kinds of endeavors in order to support growth and revenue. And the AWS business is just kind of I would say, the safety net for the whole operating margin. And I'm going to look here for a quick chart to see if I can open something really quickly for you guys. How much revenue does Amazon have from AWS? Amazon AWS revenue by year. And I think I found it. Yeah, I think I found it. And I'm going to show you a screenshot. Okay. So I'm going to be opening screenshot for you to just see the Amazon revenue. Here we go. Okay. So when Amazon started talking about the AWS revenue, that's when the stock ripped. When did Amazon reveal AWS revenue? So it was in April 2015. And Amazon stock in April 2015 was around $375. Okay. So I want to drill down on that period. So I'm going to do another screenshot here. Just so I can show you. Let's see. Okay. Almost done. There we go. Okay, so I have another image preview for you to add here to the mix. So this is what I promised whoever was on the stream yesterday. So let's talk about this because this is super important. When Amazon started breaking down the AWS revenue, what basically happened was that it gave the stock green light to rip very, very high. So I'm just going to fix this on the screen so you guys can see. And here's where Amazon revealed the revenue was around $7 billion. And the stock was around $380, $370. And when people saw how fast this business grows, and when people saw how profitable the AWS business was, it caused a lot of people to kind of put the pieces together of how does Amazon actually work? What's the end goal? And they're using AWS to keep fueling revenue in every other aspect and place possible. So this is the area where people started talking about the AWS revenue and starting to understand how much revenue AWS was contributing to the bottom line. And I think that point was a huge game changer. I'm going to try to just make this larger in size for you so you can see the date. This is where people started to understand the growth story. In this area, nobody understood yet what's going to happen. It only when we reached the period where Amazon decided to reveal the huge revenue that they have from this business. So I'm going to decrease this. I'm going to show you. Look how much this grew. This is crazy. This is 30 to 40%, 50% a year sometimes. Nobody has these kinds of businesses in terms of growth. Like nobody. Cloud computing is a very high profitable, high margin business. For those of you who don't know, we're 8 minutes away from the bell. I'm super excited to see what kind of announcements are going to come down the pipe. I have a good feeling that we're going to have some interesting announcements. Just kind of my gut feeling. I think that Amazon has a lot of, I would say, untapped potential in terms of things that they can do. Can you imagine Amazon selling houses? Can you imagine a situation where this company starts to go out and just sell houses? It sounds to me like a huge missed opportunity. So let's say if Amazon starts selling houses and they sell ready-to-go houses that can be dropped on a lot. And those houses are, I don't know, at least, I don't know, $250,000 houses or $200,000 houses. $200,000 houses times, I don't know, 100,000 people buying these houses a year in the first year. I think that would be super interesting. I think that would be a very lucrative business for them. People are buying a house on Opendoor without ever seeing it physically. Why not buy a house on Amazon? Just makes perfect sense. So I promise I'm going to try to improve the stream quality. So bear with me. Hopefully nothing bad happens while I try doing this. And if it does, I'll be back in a jiffy. Let's try to bring it up by double. Okay. And let's have the camera just a bit more focused on me. Let's have less of my background. Okay. Better. I think this is way better. So happy I did this. Okay. Was there any interesting news before today? We are 5 minutes away from the closing bell. We're obviously going to get in the news feed here. Is there anything interesting coming out of CNBC? Try to hit up the volume here. I don't know if you'll be able to hear.
So clearly advertising's been great so far this week for the big cap. Amazon and Twitter in their own separate ways have enough exposure and expertise in that space yet to see the same sort of outperformance as we saw with Google and Facebook?
I think the answer is a qualified yes. Neither of them have the scale that a Google or a Facebook have, and as broad of an economic exposure that as those two companies, and that's partly what's powering their results. Twitter is your pure play off of advertising revenue. The trick for Twitter is going to be what's the outlook like in terms of the user growth that spiked during the COVID quarters. And now as you go into those tough comps, the question that investors are going to have is that going to trail off like it did with Pinterest to lead to disappointing results? Or are you going to get the snap outlook and get a call for more robust user growth and cause that stock to rise up? Our guess is that it's more likely to have a Pinterest than a snap outlook.
We've seen Apple tail off during the session. It's now down week to date. Microsoft's down about 4% week to date. Does Facebook deserve its 10% or so gains this week, 8% gains today relative to those other companies, because all of them have beaten earnings estimates?
Well, the advantage that you had as a Facebook shareholder going into the print was that the stock was trading pretty much at its average forward valuation. And what's very clear, especially with the ad names, is that COVID, for good or for bad, has been a structural win for these companies. You had all of this new business formation, and all those new businesses are using Facebook and Google to launch their new enterprises, to get new customers in the door. And then you had this huge tip over in terms of linear TV ad budgets in the back half of last year that came online and are going to stay online. So yes, we think Facebook deserves this kind of move up in the stock, and we think it can deserve further re-rating. They're also talking about a lot of new growth areas like Facebook Marketplace and WhatsApp. There's a good momentum that should continue for Facebook.
Is Amazon an ad play yet? I mean, obviously it's e-commerce and Amazon Web Services cloud, but where does that leave us today? And will it get that kind of ad tailwind as well as it goes up against Facebook and Google on advertising?
So, Sarah, I think there's enough room in there for them to do that. Look, what we've heard from Google, Facebook, Shopify, eBay is that online retail is, on fire in the March quarter. Yeah, I'd be shocked if Amazon didn't hit numbers at the very high end of its guidance range or above. I mean, online retail is that strong. And with that is Amazon's advertising revenue. It's so geared towards that shopping activity. So there's 2 out of the 3 segments that should report really, really robust March quarter results. That leaves the cloud business, AWS. Microsoft kind of gave you a tepid response, maybe. I mean, just modest deceleration, and they're growing very well, so no problem there. But this could be the first quarter in a while in which you'll see AWS actually grow faster than Microsoft on a dollar basis. They've had 5 quarters in a row of accelerating backlog growth. So our guess is that AWS is going to have this acceleration. So it's with Amazon, you've got 3 levers that they're going to print positive tonight. It'll all come down to the guide for the June quarter. That's going to determine the stock move.
Well, on that note, Mark, I mean, for the rest of the year, what is your top pick based on the fact that we are going to have clearly some tough comps for all of these companies and some pretty rich valuations?
Well, it's actually Facebook and Amazon. Our thought was we want to find if there are COVID structural winners, and I think they are, Amazon and COVID, and they're great businesses to begin with. If they're back trading at average forward multiples, they shouldn't be. These stocks should re-rate because coming out of the COVID crisis, their fundamentals are actually stronger. You want to buy Amazon, you want to buy Facebook. Our third pick is kind of the COVID recovery play. That's Uber.
Okay, So that was interesting, and we are 18 seconds away from the closing bell, and Amazon is trading just around 3,471. And that is the bell, people. Okay. Let's see what Amazon's got. Gonna have that news ticker up here. Let's see what we're gonna get. I have a good feeling that Amazon's beating. What do you guys think? Do you think Amazon's beating? I think Amazon's beating. It just makes total sense for them to beat. I feel that they're such a strong company and they're executing on such a high level. Why wouldn't they beat? I just feel it makes sense for them to beat. Let's see if there was any other interesting news that I might have missed a couple of minutes before Amazon earnings. Okay, we have earnings. They're out. That's it. Wow. Okay. The numbers are out. Let's go. Amazon sales $108 billion in the first quarter. Amazon first quarter net $8 billion out of the 108, $8 billion. Guidance for second quarter sales anywhere between 110 and 116 billion. The earnings per share was $15.79. The second quarter operating profit should be anywhere between 4.5 and $8 billion. Amazon first quarter operating margin 8.2. Okay. What else do we have here? Let's see. Services sales, 50 billion. Product sales, 57 billion. Where is the advertising? That might be interesting. Okay, let's take a look. What do we have here? Let's dive deeper into this. Operating cash flow increased 69% to 67 billion for the trailing 12 months. Okay. Free cash flow increased to 26 billion for the trailing 12 months compared to 24 billion. Free cash flow less principal repayments of finance leases and financing obligation increased to 14.9. So pretty much seeing here a pop on Amazon stock going up to $3,600 after the bell. Very, very interesting results. Let's continue reading. Common shares outstanding plus shares underlying stock-based award total 518 million. Net sales increased 44% to 108 billion in the first quarter compared to its 75 billion in the first quarter of 2020. 44% increase in sales. That is a lot of money, people. Foreign exchange rates throughout the quarter. Net sales increased 41% for the quarter of 2020. Operating income increased to 8.9 billion. Net income increased to 8.1 billion. So Amazon is making money. Let's see what Bezos said. 2 of our kids are now 10 and 15 years old, and after years of being nurtured, they've grown up fast and coming into their own, said Bezos. As Prime Video turns 10, over 175 million Prime members have streamed shows and movies in the past year. I guess Amazon Prime is bigger than what people actually thought. Interesting. Um, Amazon Studios received a record of 12 Academy Awards nominations and 2 wins. Very, very impressive. Very impressive. Wow. Let's see what else. Upcoming originals include Tom Clancy's Without Remorse, The Tomorrow War, The Underground Railroad, and much more. In just 15 years, AWS has become a 54 billion annual sales run rate business, competing against the world's largest technology companies. What can I say? It's true. These numbers don't lie. AWS is huge. Let's see what else. Accelerating 32% year over year. Okay, just for those of you who want to see what's happening with the stock, just a second. I will show you. There we go. Just around 3,600. And let's continue reading. Our vision to be the Earth's best employer and the Earth's safest place to work. Interesting. Okay. Amazon ranked number 1 in the US on LinkedIn's 2021 top companies, an annual list identifying the most sought after places to work based on their ability to attract and retain the best talent, including promotion opportunities for employees. Yeah, let's skip that. In partnership with government and public health officials across the globe, Amazon is repeatedly expanding on... Okay, so... I'm trying to kind of find the more interesting things here. Related to the results. Let's see. Amazon added 300,000 new direct and indirect jobs in India. So that's big. That is big. That's a lot of jobs. That is a lot of jobs. Okay. For those of you who have just joined, we're going over Amazon's earnings. So just going to do a recap because I see a lot of people joining in. $108 billion in sales, $8 billion net. And Amazon added 300,000 new direct and indirect jobs just in India, which is crazy. That's an emerging market country that's expanding, and there's a lot of business there to be done. Okay, what else do we have here? Amazon Future Engineer, the company's computer science education program to students from underserved communities. Amazon announced a long-year partnership with the King Memorial. Okay, let's continue on. What else do we have here? Wow, this is long. Grocery stores in 4 new communities. Let's see. A lot of announcement from Amazon. A lot of different initiatives. A lot of news to update. This is an interesting title. Amazon made as much profit during the pandemic as the 3 years of previous earnings combined. That's how much Amazon grew. That is an insane number in terms of growth. Okay, if you agree with me that Amazon's growth is insane, hit that like button. Let's see how many likes jump right now. I want to see how many people here think that Amazon's growth is off the charts. I certainly think that it is borderline madness. What else do we have here? Amazon says there are now 200 million paid Prime members worldwide. I'm a Prime paid member, and I use also Prime Video, which is not a bad service at all. Okay, let's see. Beat analyst consensus by 64%. 5%. So if you're trying to kind of understand the jump we've had after the bell, it is a jump that makes sense. Analysts, just like with Facebook, just like with Apple, way off. I have a feeling that a lot of the analysts just were too bearish. I think the market is caught off guard with bearishness. I think Amazon is proving that people were just too negative about the market. I don't know what to say. I'm trying to think about the numbers they just posted. It's a company that generates $100 billion in revenue. That's $500 billion in revenue a year. I wonder where this puts Amazon in market cap. If Amazon has... I see now the stock falling. Let's see when the Amazon earning calls start, and let's get ready for that. Amazon earnings call. Let's see when that starts. Okay, so I'm gonna have to put in here my name for getting in the earnings call. Okay, let's see. What do we have here? When is it starting? 2:30 Pacific time. Yeah, so we have cool music in the background. Let's decrease the volume on that. Yeah. Okay. So Amazon presentation has not started yet. When it does start, I promise to put the volume up on that earnings call. So if you've just joined, let's do a quick recap on everything. Amazon beating analyst consensus big time. How big? I don't know even when, where to start. They had a 215% increase over the earnings of last year's quarter. I think Amazon is on its way to beat at least $3 trillion if this is what's continuing. Okay, let's start digesting the numbers here. Let's go over them. Okay. For the earnings call, you just see the revenue, and it is staggering. They think they're going to do up to 116 billion next quarter. I think they're trying to be conservative. I really think $116 billion is trying to be conservative. They're assuming that the Prime Day occurs in the second quarter of 2021. So that affects the 106. I think that is, again, another way of playing a conservative kind of narrative. Let's see what else. Very conservative narrative, in my opinion. I don't think they're going to do less than 120 billion. Yeah, you can see the numbers here in terms of operating expenses. They've grew as well. Let's see. Net income numbers grew like crazy. The net income numbers just grew like crazy. And you know Amazon is trying to spend. You know Amazon is trying to... The spend... They spent as much as they could, and so we're left with a net income. For years, Amazon tried not to earn anything. Just to not pay taxes. Oh, this is an interesting piece. Amazon expanded Discover Rooms, an immersive shopping experience that helps customers browse and shop from thousands of home room designs and instantly discover home furnishing product inspiration based on visual attributes. Interesting. Prime Wardrobe. Amazon's try before you buy, offering expanded selection and launched new innovations for customers, including ability to chat live with an Amazon stylist. In the US, Amazon expanded assortment of NFL merchandise, including replica jerseys and hats at amazon.com/NFL. Okay. What else? What else? Struggling here with the window. Amazon announced new Alexa features such as music sharing with Alexa, which allows users to share songs with friends and family who are Alexa contacts. And Alexa for Xbox, which gives US and Canadian customers more ways to interact with the consoles. Amazon launched a new Alexa Prize Taskbot Challenge. Okay. What else do we have here, people? What else? So this might be interesting. Ring introduces Ring Video Doorbell Pro 2 and Ring Floodlight Wired Cam Pro, both featuring 3D motion detection and bird's eye view. Okay, so that's about the Ring product. By the way, if you have Alexa, I want to know about it. Let me know if you have Alexa by hitting the like button. Let's see how many likes jump if you have Alexa. I think we're just going to wait for the earnings call and watch some CNBC for now. I think that is the proper thing to do. While we wait, Amazon stock is settling. Nothing to write home about yet. Let's see. Just
1.3 million the previous quarter, and you are seeing that commentary that we've heard in recent weeks about wanting to be the world's best employer, but notable that perhaps the pace of hiring is slowing. Still the number 2 largest employer in the country, private employer. Back to you.
Dee, thanks so much for that. Now up 3% after hours. Let's bring in CNBC contributor Ed Lee from the New York Times and Tom Forte from D.A. Davidson. Very good afternoon to you both. Tom Forte, to you first. Sum it up for us. What's your take?
Yeah, so for me, the most important data point was the expectation that sales of the June quarter are going to be better than expected. If you go back to the early days of the pandemic, recall that Amazon leaned into essentials. This had a negative impact on their sales. They weren't able to keep up with demand. Since then, they've added fulfillment centers. They've added headcount. They're much better prepared. I think that's going to position them for the June quarter, and that's why the June quarter revenue is going to be better than expected.
Yeah, so Ed, I mean, we were expecting very tough comps throughout the rest of the year, but we're seeing, whether it's Amazon or other big tech players, that they have seen structural shifts over the last year, not just temporary COVID shifts.
Right, and I think that should signal to the market, the marketplace, what's going on with, when we get out of pandemic or even in mid-pandemic, there is sort of a secular change. I think people are going to just continue to buy stuff on Amazon like they were during lockdown periods. Maybe not quite as much as in terms of volume as before, but it was sort of an introduction to, the service for a lot of people, and they found that they liked it, so that's going to continue. I was blown away by the advertising numbers. Well, that is now their fastest growing business. The other thing for me, and I counted this, he mentions Bezos mentions Prime Video 17 times in his letter. I think it's the most he's mentioned Prime Video, talking about all the sports rights they're getting, NFL, etc. I think just look out for more of that, I think, in the future. I think, there's going to be more investment in that space. 175 million people watching streaming video, which, again, was a surprising number. Netflix is at 207 million. So Amazon's very, very close behind.
His 10-year-old child, he calls it. Yeah, that is
yes,
Prime Video.
Exactly right.
So, Tom, AWS, where's the AWS versus Microsoft Azure battle going? Who's growing faster?
So I still think, yep, great question. I still see AWS as the market leader, and I think there's a potential in a rebounding economy that AWS outperforms in 2021. If you think about what Amazon did last year, they worked with customers in travel and leisure.
Let me know who has Amazon Alexa here. I'm interested in knowing.
Because of the pandemic. So
do you have it? Do you like it?
I think there could be better than expected performance for cloud computing for Amazon this year, which would be great for profits for Amazon in 21.
And Ed, what about the outlook for advertising? I guess not a nascent business for them, but not as developed as some other parts, and clearly a very strong business for some of their rivals at the moment.
It is. It has been. I think, I've done some channel checks with media buyers, and, they are now shifting more TV dollars strictly towards digital. You saw that with Google and Facebook in their earnings reports in terms of blowout advertising numbers. I also think Amazon will benefit from this shift towards away from third-party cookies, right? So if you're a marketer, basically, if you're selling product, and you're selling it on Amazon, I mean, their advertising business is really just sort of effectively these co-op fees, right? So on Amazon, they know they have first-party data, they know the customer, and that's really what that ad dollar means. And so I think they'll benefit even more with the disappearance of this tracking, with the disappearance of this sort of third-party data that after what Apple's doing to its iOS and even on web browsers as well.
Tom, Bezos is obviously handing over the reins at a strong time for the business. Where's the investor community on this? Are they sort of cool with this transition? And do you expect any talk about it on the call?
Sure. So I think if, picking Andy Jassy, the head of AWS, the most important business within Amazon, retail also important, but to me a sign that they're going to focus more on services in the future. Generally speaking, when I think services, I think higher margin that can enable it to maintain its multiple over time. So I think investors are more than comfortable with the transition.
Tom Forte, Ed Lee, thank you both very much. Appreciate it. Amazon surging after hours. Let's get back to Mike Santoli for a look at Treasury yields. Mike, with continuing to fall, do you think this is related to the higher tax proposals from Biden?
They do, and they remain contained, although what we're looking at here is dividend yields for the S&P 500, which we can compare to Treasury yields. So we've seen actually a big decline in the S&P 500 dividend yield, down to about 1.4, as low as it's been since about the 99-2000 range. It was lower than just a little bit by 1.2%. It's been a remarkably steady around the 2%.
So very interesting. Market is probably, I think the market is probably primed to go all the way to S&P 4,500. I think that people were very bearish. I think that people were extremely negative. That's the word I'm looking for. People were extremely negative. And I think all these earnings are just surprising people. So let's see in the chat. Who do we have here? Yes, Nick, Amazon earnings are really good. They are out of this world. Okay. So we're waiting for the earnings call to start. If you've just joined, Amazon blew earnings away in the best way possible. So much income generated by Amazon. Just so much. Over $100 billion in sales. $100 billion in sales. Crazy. Okay, so CNBC is out on commercial break. Let's go over those numbers one more time. Amazon doing $15.79 per share. That is up from $5.01 a year ago. Sales rose to $108.52 billion from $75.45 billion a year earlier. Let's see. Net sales are expected to be next quarter anywhere between 110 and 116 billion. Very, very interesting. Kind of wondering, is Amazon going to announce anything crazy on the call? They gave us a lot of information. They were talking a lot about Amazon Prime. Is there going to be anything related to electric trucks, or, like I said in the beginning of the stream, will Amazon start selling houses eventually? By the way, a huge surprise would be if Amazon put crypto on their balance sheet. I feel it's one of those things that can happen. It will put Amazon in a very uncomfortable place, I think, in many ways, but I think it's something that can happen. Why not put crypto on their balance sheet? Why not buy Bitcoin? If Amazon bought Bitcoin and split the stock, that would definitely generate a lot of interest. So if you're on the stream, let me know in the comment section. What are the chances that, let me know in the chat, what are the chances that Amazon bought cryptocurrency? What are the chances that Amazon bought $1 billion in Bitcoin and put it on their balance sheet? You don't forget $1 billion, $100 million. Like, I feel if you're a payment company like Amazon Pay and you're not putting crypto on the balance sheet, and you're not going to be supporting crypto down the line, and you're not going to let people buy on Amazon using crypto, I think that puts you in a situation where you are behind the curve. I really think that puts you in a situation. So let's think about it for really, like, let's think about it really seriously for a second. Crypto is currently kind of like a store of value kind of asset. And people are using Ethereum now a lot because of NFTs. But what if somebody wants to use whatever Bitcoin or Dogecoin just to buy on Amazon? Why would Amazon not entertain that for small products until a certain price? Let's say you can do a checkout up to $10 in crypto. Why not? It sounds to me pretty legitimate. Why not try to capitalize on cryptocurrency? I think there's a lot that can be done. I don't know. Maybe it's just me. I would love to see Amazon allow buyers to buy with cryptocurrency. I think we're 2 minutes away from the earnings call, so I'm going to increase the volume, and we're going to listen in. What do you think? We're going to hear something interesting on that earnings call? So before we start the earnings call, if you're new here, this is the time to hit like and subscribe. there's a chance. There's a chance I'm off here by an hour. There's a chance that I have the time wrong, and the earnings call is gonna be in an hour. So let's continue with whoever joined us and go through again the quarterly results. I think if you are here from the beginning, it's time for you to go make yourself a coffee. And if you are new here and you don't know what the results are, Amazon have beat on earnings and generated almost $110 million. I repeat, $110 billion. Let's see. If you were Amazon, which company would you buy with all that cash generated? Like, that's the question I'm asking myself. What companies can Amazon buy that they haven't bought yet? So for those of you who I told you that the earnings call is starting now, I'm sorry, I was off by 1 hour. So there's a whole hour for us to continue to debate what should Amazon do with all that money. It's a lot of money. And even with just the net profits, the $8 billion, they can invest it immediately into some interesting purchases. I said that yesterday about Apple. What if Amazon bought a Peloton? Like, seriously. What if Amazon just bought any kind of company related to sports, wellness? Like, I feel that would be the right thing to do. I just feel if the company should do something with their cash, it's that. By the way, the stock, very interestingly, is making its way up again. So we already had a nice pop, and now it's making its way up again. 3600, and we are on our way again, maybe back to the 3,650 area. I don't know. I do not know. Well, what I do know is that I think that it's going to be a very hard for a lot of companies to compete with Amazon. I have a friend who has a company who's competing with Amazon. Huge shout out to my friend who owns an amazing company called AVO, AVO, just like avocado. And if you live in the New York area, I highly recommend checking them out. It's avo.app. No, wait, my bad. Sorry, not avo.app. My bad. That's a different Avo. It's AVONOW. It's Avo Now. So, if you're in the New York area, I'm going to do here a shameless plug to a startup that belongs to a friend. And you want to get deliveries. Not sponsored by the friend, just a shameless plug to a startup that belongs to a friend that competes with Amazon, because we're on Amazon earnings, so why not? Let's generate for Amazon some competition. Okay, here we go. If you're in the New York area, check them out. There are more options than just Amazon. That's all I have to say. And the reason I know he has a good company is because my dad is one of his clients. So that's it. That's it for the shameless plug. Let's continue on with debating what is Amazon going to do next. Or let's look at Netflix and HBO Max and Disney Plus and try to extract from that what Amazon Prime can do next. Because I feel that they need to do something that nobody else has done yet. And I feel that one of those things would be to One of those things would be to do live sports. I think that if Amazon Prime dives into live sports, that would be very interesting. I think that would be a very interesting endeavor for Amazon to do. Like, I'm obviously talking out loud, and let's just, take a moment to think about this. Why not go into sports? Like, what can be the downside of going into, like, sports? There's, for the advertiser, an upside. For people with Prime, they're going to get much more. I think they should do the English Premier League. It will cost them a ton of money, yes. But I think they should do the English Premier League. If they have the English Premier League, I think they're going to do well. If Amazon decides to get the rights for games for Manchester United and Chelsea and Manchester City and Liverpool and Tottenham, they're going to do well. I think a lot of people will sign up for Amazon just to watch the English Premier League. Because I think that's like a 500, 400 million viewer market. Like, I think 5% of the world's population watches at least one English Premier League game a year. I think that makes sense. And because of that, Amazon should just get the rights for something like that. So the stock is ticking higher. We're already at 3,632. For those of you who have just joined us, Amazon beated big time this quarter. And they generated almost $110 billion in sales. And they are expected to generate above $110 to $116 billion in the next quarter. So who thinks Amazon's going to beat next quarter? I think Amazon's going to beat the next quarter. Who thinks Amazon will beat earnings in Q2? Let's see what you guys have. So let's spice up the chat. And for those of you who are meeting me for the first time, for those of you who have never been on the channel, I never do ads. I will never sell courses. And I am all about creating high quality content for you. So if you are interested in content related to the stock market, finance, and you don't want to get any ads or crypto promotions or brokerage promotions or courses promotions, anything, any monetization of that sort, hit the subscribe button. Just find that subscribe button. It's probably somewhere down if you close the chat. Hit the bell for notifications. And let's continue this awesome relationship we have with each other here. Talking about Amazon's earnings. Talking about earnings of other companies on other days. And for those of you who have just joined, I actually created something cool. I showed some of the people in the beginning of the stream. Just kind of the evolution of Amazon stock. I'm going to open this up for you. It was super interesting. So just going to put this on the screen. Hit like if you like these kinds of analysis. So just going to make this disappear for a second. Just so we can have a quick look into this. So you see this point in time? This is when Amazon decided to start talking about their AWS revenue and to break down the AWS revenue. And since then, people understood how the business works. And the P started making sense to some people. Now, going into earnings, P was around 83, very high. Amazon PE used to be in the hundreds. In the hundreds. This is still a massive growth stock. When they grow their business, if they grow sales by 10%, they're growing more than $10 billion. These are insane numbers. And just to kind of show you AWS numbers, let's take a quick look at that. AWS numbers are very impressive. I'm going to put them on the screen. Just because they're so impressive. 1 second, guys. Here we go. Okay. Here are the AWS numbers. This is a massive business. If you're impressed by the AWS numbers, hit that like button. Just hit it. It's impressive numbers. Like, kudos to Amazon. High margin business. Growing like crazy. Powering startups. Powering enterprise. You gotta hand it to them. They built an amazing engine for everything else they're doing. They built an amazing engine for their Amazon Prime video endeavors, for their commerce endeavors. I actually wanted to hear how much their advertising business is doing, just because I feel that Amazon 10 years from now might become a Google competitor. I can see that happening. I think that can happen. Why not? Amazon has enough supply and enough demand to be a very interesting advertising business. Okay. So we are 50 minutes away from the earnings call. So let's recap everything we had in the stream so far. We talked about the revenues enough. I showed twice the example of AWS and how much it's powering the company. I think I invited you guys to kind of think with me what kind of company Amazon can buy. What kind of announcement can they have? Will Amazon have cryptocurrency on their balance sheet? Will Amazon buy $50, $100 million in Bitcoin? Will Amazon start allowing people to buy with cryptocurrencies on the site? Like, I feel that if an NBA team, like the Dallas Mavericks, Mark Cuban, is selling merch and allowing people to buy merch with Dogecoin, why would Amazon not do that? I think Amazon has enough, I would say, savviness to bring the whole consumer cryptocurrency to the front. Okay, so I'm going to turn on some more CNBC for us. I've been told in some past streams that sometimes I need to take a break. And I like that feedback. That's good feedback. Let's hit the volume up. See what we have on CNBC. I think we're in a commercial break. Okay, it's going to come back. I wonder how many of you are surprised by Amazon results this time around. A lot of people say that, okay, pandemic is over, Amazon is going to go back to the days where people just bought stuff on Amazon because they needed and not because they were stuck home, but it's a convenient way to buy stuff. Like, look, I live on a whole different continent, and I buy a ton of Amazon stuff. Okay, CNBC is back. Let's hear what they have to say.
Here with that story, one way to distinguish yourself from the big banks, Kate. Exactly. SoFi is joining a group of companies doing this. It's the latest startup to allow cardholders to earn rewards in cryptocurrencies. SoFi clients
will get 2% back on purchases. That's in either Bitcoin or Ethereum, and that gets deposited straight into their accounts. And the company says it plans to offer some other digital assets sometime soon. Earlier this week, guys, we had MasterCard say it was doing something similar and teaming up with crypto exchange Gemini, which was founded by the Winklevoss twins, to offer 3% back with Bitcoin and other assets. Visa, meanwhile, teamed up with BlockFi for a similar card. And when that launches, it will give customers 1.5% back on purchases. And there already seems to be demand, guys. I checked the waiting list just now. It has more than 275,000 people on it. I also talked to one person on that wait list this morning and asked him why Bitcoin instead of points or cashback or miles. He says that he doesn't fly enough for airline miles to be appealing and uses a cashback card right now. So he says turning that into Bitcoin that's just deposited back into his account is essentially just a better rewards program. Guys, back to you.
I totally get how different choices and things make a difference. Cashback in general versus, say, points for purchases for airlines. I mean, 2%, 1.5%, 3%, it's not like groundbreakingly better level of reward than credit cards that are out there. I think the attractive thing is just that the Bitcoin aspect will apply, and that probably will attract a certain type of person, as it clearly is, based on the wait list you mentioned.
It definitely does, and the designs even seem to be different. I mean, the BlockFi one is sort of a black card, and in some ways I think it is sort of a sign that you are committed to Bitcoin in the case of that card. If you have a Bitcoin rewards card, you're getting 2 or 3% back. It's a small amount of cryptocurrency back in your account, but I think it is, for a lot of people, more symbolic than anything. You're right, though. It's only 2 or 3%. I think the bigger competition is on a lot of these companies, BlockFi included, offering higher interest rates. And so some of them incentivize people to deposit their Bitcoin there and offer way higher interest rates. So that's really the competitive landscape. This seems to be more just to have it, right? Like MasterCard and Visa are both offering this and partnering with people. We'll see how these really take off if they do.
Okay, Rooney, as always, thanks so much. Still ahead, Amazon reporting a big beat on the top and bottom lines. That stock hitting an all-time high after hours. So we'll dive into the report next. And April is Financial Literacy Month, and CNBC is committed to sharing messages from business and thought leaders about the importance of financial education. Here is President and CEO of the Council for Economic Education, Nan Morrison.
Currently, 21 states have a requirement for personal finance, less than half the states in the country. And we know that when you get financial education, in particular to kids from low and moderate income communities, it makes a big difference in their savings behavior and how they finance their education. So not having requirements is a particularly harmful moment for the low and moderate income students and those communities in our country.
Okay, yes, Dante, it was a good decision. Okay, guys, let's talk in the chat a bit. I am more fond of using my phone to answer you guys than the keyboard. Let's get to know you. How many Amazon shares do you own? Let's hear from you guys. How many Amazon shares do you own? And if you own an Amazon share and you're happy to be here waiting for the earnings call, hit that like button. And if you enjoy this type of content, if you want to follow really great content with added value about the stock market and about finance, subscribe. I promise you, I will never try to sell you any kind of course or ads. Just love to create videos about public companies. For those of you who have just joined, I'm going to repeat again the Amazon numbers. Almost $110 billion in sales. Expecting to do more than 110 in the next quarter. Ending with an $8 billion net profit. Amazon Prime has 200 million users worldwide. So Amazon Prime has 200 million active paying users worldwide. Mind-blowing number, in my opinion. Let's see. What do we have here? Do I see Amazon going up tomorrow? I see Amazon dipping to 3,400 before reaching 4,000. But what do I know? I am not a financial advisor. It's a good time to talk about that.
Show you some after-hours earnings movers. It's been another busy session here. Amazon
Fact that I'm not a financial advisor, people.
A bottom line beat, profit tripling during the quarter. Sales also coming in a lot better than expected. Twitter is falling hard, down 9% after hours after missing those critical user numbers and the guidance, as we just heard from an analyst, on users also coming in a bit underwhelming. Gilead Sciences moving lower by 3%. Mike, want to talk to you about Amazon. Obviously, pandemic shopping continues to help. Jeff Bezos in the release also touting Prime Video and AWS, the cloud computing business, which continue to be a big profit driver. What stands out to you?
Yeah, I mean, obviously all of that, the fact that they are able to, even though they don't really target earnings, they obviously harvest enough earnings when top line is growing this fast. Decent visibility on the current quarter. Sometimes Amazon gives a very wide range of revenue estimates for the current quarter. So I think things are mostly on course. We really want to watch, though, the stock reaction through tomorrow. Remember yesterday, blowout Apple earnings, stock was up after hours, let's say 4%, 3%, and today Apple shares trading flat, and similar to Amazon, had also been pretty much sideways since September or so.
Let's just get to Deirdre Bosa now, who's been on a call with the Amazon CFO. What more can you tell us, Steve?
Well, that just wrapped up. He said that this is going to be another investment year for Amazon, spend in areas including capacity, both that middle mile and the end delivery, to increase one-day and same-day delivery. He also says expect more spend on content for Prime Video. We saw a huge jump over the last year. He says that expect that to increase once again year over year. Engagement has gone way up. He also addressed moving up Prime Day to the second quarter. He said it had nothing to do with trying to help with tougher Q2 comps, but rather they optimize for customer experience, and they think it's better for their customers and their vendors to move it up a little. He also addressed that employment dip that I mentioned from Q4 to Q1. He said that generally you do see a flat to declining number in the period, and part of it this year had to do with them seeing warning signs in mid-February that the pandemic and lockdowns were coming, so they scrambled at the start of the pandemic to hire a lot of people, and they're reverting a little bit now. Back over to you.
But Dee, I guess an investment period to come, but headcount for the first time in a while did decline. Are we expecting it to go up again, or it's investment in other areas?
I mean, he noted that they did hire 500,000 people last year, 500,000 people, and he said that this is just sort of normal. It went from 1.2 million, went to 1.2 million from 1.3 million last quarter, and he kind of implied that that was part of the reopening. They scrambled to hire a lot of people last year when they saw warning signs. They saw the beginning of the pandemic and lockdown. So he kind of played it down, I suppose, and said that this was sort of natural. They've seen this in previous years as well. I don't think it changes the trajectory of them being the number 2 largest private employer in the country and continuing to build on a net basis.
Mike, one of the reasons you mentioned, it'll be interesting to see whether we see follow through on a move higher after hours. Apple couldn't quite get there, and one of the reasons that was talked about is the sustainability of the big sales gains that Apple saw. We're spending more on our electronics and our at-home items like computers and iPads and even phones. Maybe that was part of the narrative. It'll be interesting to see that about Amazon, because if you dive into the various divisions, no question, the online sales business up 41%, sales for third-party seller services up 60%, and then there's the cloud, AWS, still a healthy 32% growth, but not growing what it used to be. So it'll be interesting to see how Wall Street judges that ultimately.
Yeah, I definitely, you're going to see some of the growth rate estimates get modulated a little bit. I do think there might be a concern about just whether there's a deceleration, but unlike Apple, where you did potentially have a huge surge in demand for hardware, things that people only buy once every couple or few years, like phones or like Macs, it's not really exactly the same as Amazon. In theory, there's a little more of a regular run rate of people just adopting their services, even if things like Prime domestically start to look saturated.
No, and the growth forecast was strong, better than expected, and continuing to show growth. Deirdre Bosa, thank you very much. Up next, your Wall Street look ahead. Shares of Chevron getting slammed over the last year, falling more than 25% at the height of the pandemic. As lockdowns weighed on demand for fuel, that company gearing up to report results tomorrow will tell you what to watch. From that one and many other names, next.
Okay, guys, we are 35 minutes away from the earnings call. So stay tuned. I think it's going to be an interesting one. I think they're going to talk about a lot of investment on Amazon Prime. You heard on CNBC, they already talked to the CFO. It's going to be another investment year. Big shocker. Every time Amazon says it's going to be an investment year, usually the stock would sell off. Now everybody is expecting it. When Amazon says it's going to be another investing year, they're again going to try to race and try to spend all their top line and create growth. And you can see that this year, they just couldn't spend it all. They didn't manage to get rid of all their top line. I feel that Amazon Prime is going to break eventually Netflix's most expensive years in terms of content creation. I think that Amazon is going to beat Netflix at that game of creating content. I think that Amazon will have a chance of leveraging their Prime program to eventually reach 250 million users by 2025 that are watching video on Amazon Prime. That is my assessment. They're going to have around 250 million by 2025 people watching Amazon Prime. I think there's going to be enough content there eventually. Let's be critical a bit about Amazon Prime. It has one of the most ugliest user interfaces I've ever seen. Amazon Prime is probably one of the most uncomfortable, terribly looking user interfaces I've ever seen for anything that lives in my TV or on my iPad. Just a terrible user interface. If you also think that Amazon Prime has a terrible user interface and you want Bezos to fix it, you want the team there to do a better job on the Amazon Prime interface, hit that like button. Show this stream some love. So other people can join us, the algorithm can recommend, and we'll all be a one big happy group of people waiting for some Amazon results. I really want a out of left field announcement around cryptocurrency.
Now,
I really do.
Wall Street look ahead. Some data on deck. We'll get consumer spending and consumer sentiment tomorrow morning. And then on the earnings front, another busy one. AstraZeneca, Restaurant Brands, Chevron, and ExxonMobil will report quarterly results. Plus, don't miss ExxonMobil CEO Darren Woods on Squawk Box tomorrow morning, 7:30 a.m. Eastern, to talk about those results and generally the demand for oil. Don't forget, Mike, I'm most excited about Colgate and Clorox reporting, of course, because we'll see just how much of the pandemic trends are sticking, and or maybe it'll be like a Kimberly Clark, and we just hoarded so much on toilet paper and we don't need to buy more of it.
We're going to stop doing laundry and brushing our teeth. So
I think those wipes are going to.
Okay, let's talk about the split. I see a lot of you guys in the chat talking about a potential stock split for Amazon. If Amazon splits their stock by 10, okay? If they split their stock by 10, that's pure genius move, and I'll explain. Facebook, Apple, Microsoft all trade in a certain range right now. They all trade in a very kind of familiar range. The $200, $300, $400 area is the area that, like every FANG stock should be, to feel enough premium in terms of the share price, and in the same time to be accessible to people. It's hard for people without a brokerage account that allows fractional shares to buy Amazon stock. It's an expensive stock. It's $3,600. Sometimes you want to just put $1,000 in a stock, and with Facebook that gives you around 3 shares. With Apple it gives you around 8. With Microsoft it will give you around 4. You can't buy a full single share of Amazon with $1,000. You buy a third of a stock, and even less. So if they decide to split, they should decide to split it by 10, by 12. Somebody says here that they might split by 20. If they split by 20, I'm telling you right now, the stock will go up between 5 and 10% after hours if they announce some kind of split like that. Okay, let's put on some fast money. We have 28 minutes until the earnings call goes live. Just gonna check here what's happening with that webcast. Still cool music. Okay. Let's put back some CNBC. And let's stick together until the call comes. We're not far away. Okay, they're talking about Amazon. Let's put the volume back.
Was physical stores, which includes Whole Foods, and where Amazon has struggled to really gain share in grocery. Bezos notes in the release that Prime Video streaming hours up 70% year over year. Remember, there are now 200 million Prime subscribers. And on that note, CFO Brian Olsavsky, he just told me that this year will be another investment year for the company. They will spend in areas like content, which he says to expect an increase year over year. We saw a big jump over the previous year as well. Now, capacity as well, he says they're going to be spending on both middle mile and end delivery to increase one-day and same-day delivery. The call, Melissa, kicks off in less than 30 minutes. Bezos is never on it, but we should note that this is his penultimate quarter as CEO before he hands over the reins to Andy Jassy. Back to you.
Excellent use of penultimate. Deirdre Bosa we'll check back in with you a little bit later on. And Guy Downey, I knew that you were thinking that excellent use of penultimate, second to last, second to final. For Amazon, though, what do you make of this pop in the after-hour session? Because it's all about the flywheel effect around those Prime subscribers.
Yeah, Debo knows clearly. And listen, okay, so the stores, the physical stores, slight miss, but Dan knows where I'm going with this. Operating margins were ridiculous. Operating income beat by about 40%. I thought the last quarter was equally good, but this is a quarter where you're getting the price appreciation in the stock. So 35.50 was a prior all-time high back in September. We're above it now. I think you stay long the stock. I mean, we haven't wavered on that. I was pretty surprised by how poorly it traded last quarter. It's making up for it now.
How poorly on a relative basis it has traded year to date and over the past 12 months, Dan Nathan. So is this quarter convincing to you that it deserves some degree of catch-up, or is this just stuck in the high valuation vortex that's not in favor right now?
Well, it's interesting. Guy just mentioned that this is the first new high since September 2nd, 2020. And when you think about what was going on there, it was just a frenzy for high growth, for value tech, for anything tech related, anything deemed to have won the pandemic. And so for some reason, investors really just wanted to take the next 7 or 8 months and digest this one. When I see this quarter, it's a great quarter. They're firing on all cylinders. I think that, the one thing that people might say aside from the bricks and mortar retail was that slight deceleration in AWS, but we know that they're a winner and they know that they come out keeping that share. Two, to me, I guess it probably ends up a lot like Apple, Mel. You're going to get this pop in the aftermarket. I don't see it getting away from yourself. You got to remember that this is a different story than Facebook. Facebook's much easier to kind of focus on where they're doing well and how they continue to do well, and the valuation is totally different. So, will this establish a new range above this long consolidation? Possibly, but I don't think it gets away from it tomorrow.
The advertising line item is really interesting, Karen. Maybe not entirely a surprise given what we heard from Facebook and the extraordinary quarter it posted, and what we heard also from Snap on that front. But the difference for Amazon and when you spend on Amazon is that the users of Amazon are high intent users, right? That they're on there for a reason. They are looking to buy something. So when you advertise, you know that you're engaging an audience that is already primed to buy. Is that a concern at all,
No
seeing the
pun
growth
intended.
there? Yeah, exactly.
Is it a concern at all because of my Google and Facebook position, or is it a concern for I feel like that pie is just growing, and they're taking it away from more sort of legacy businesses of advertising. I mean, there was nothing wrong with the Google or Facebook numbers, and they see continued acceleration. So I don't love that any competition, but I still feel like the pie is growing. Just this quarter, I just want to echo everything that Dan said. I mean, this was a fantastic quarter, and what Guy said, operating margins were unbelievably phenomenal. Everything was great. However, it's hard to say, you know what, this stock really deserves a re-rating. They already, they get a pretty good rating already, as they should, as they deserve to. They've won the pandemic. And as to them spending more money, they've shown that they're good stewards of capital. So I'm fine with that. I own some. I don't think it's totally going to get away here either. But I mean, just incredibly impressive, and I just crack up the range of revenue, 110 to 116 billion. Those numbers are just so extraordinary.
I mean, I guess the question here is, and for a lot of these stocks, is can it get better? Second quarter is when they're going to start encountering tougher comps. They're also going to lap in mid-April the effect of fiscal stimulus last year. Tim, so where do you stand on this given the quarter?
Well, it was important that they said Prime Day will come in June, so at least you've still got that in 2Q, and something that I think will help the second quarter, comp. And I think it's going to be extraordinary, by the way. And so everyone has jumped into some of the detail on the numbers. I'm just going to say 20% e-commerce penetration around the world. Amazon's spend on infrastructure, logistics, and ERP is so far ahead of everyone else. The moat here, and really, like, the benefits, it's not just to consumers, it's also to merchants on data leads and some of the ease of accessibility. So I just think that Amazon is not expensive here, and I tend to lean value, but at 16, 17 times EV/EBITDA next year by at least a handful of folks on the street, it's certainly not expensive relative to itself, relative to its history. I know you want to see more growth out of AWS, but guess what? That number had to come down. The e-commerce dynamics here and the profitability inherent in that are incredible, and I think it's time for a next move higher.
So it's a value stock relative to itself on an EV to EBITDA basis. That we were saying, Tim?
Yes.
Okay. Let's get to Twitter here. We're watching that stock drop after reporting earnings. Julia Borson's got all the details. Julia?
Yeah, Melissa, Twitter share is down nearly 10% by a couple of factors. One is that its user growth of 7 million fell 1 million short of expectations. And then the other factor was revenue guidance, lighter than analysts anticipated, though the company did not change its long-term goal shared at its investor day of doubling revenue by 2023. But still really weighing on the stock there. I spoke to CFO Ned Siegel. He told me that the company's guidance does incorporate the impact of Apple's new operating system that will enable people to opt out of ad targeting. He said that the impact will be modest, but still measurable. Siegel also telling me that a couple of points about where the quarter is trending. He said that brand advertising did get off to a slow start, but it had a strong March. And that direct response advertising, that's a newer business for Twitter, he said that was strong all quarter long, with 10 times year-over-year increase in direct response ads from 3 different categories: cryptocurrency, investing, and betting companies. Now, the company is sticking with its prior expense guidance of 25% or more for the full year. With revenue, they say, will be growing faster than that. It was worth noting that growth comparisons do get more challenging later in the year as the company laps stronger growth in the second half of 2020. Ned Siegel will be coming on CNBC tomorrow morning in Squawk Box to talk about the quarter and what's ahead. Melissa?
All right, Julia, thank you. Julia Borston. Dan, what do you make of this huge stock move lower?
Yeah, I'm going to make it really easy for the people out there. We have a chart. It goes back to last spring. You just draw a line from the low in March, and you just attach it to each time that it's touched that line over the last, let's say, 13 months or so. And what do you got? You have a great buying opportunity each time. There's been 3 moves when it's bounced off that uptrend of 80%, one of about 45%. It feels like it's headed back. I know this is not a huge stretch here, back to the mid-50s here. And if you get it, if it overshoots to the downside, like it just overshot to the upside, that's where you buy it. What is the catalyst here? Well, expectations have been reset right now. They had an analyst meeting a few months ago laying out all these new products. I think their acquisition of Review, which is their kind of Substack competitor, and then there's Twitter Spaces, which is their Clubhouse competitor. These are going to be very interesting products. They're just being rolled out right here. They're focused on this creator economy and focused on how users can monetize them, which will increase engagement. So to me, I like everything they're doing there. I did not like it a month or two ago when the stock was trading near 80 bucks, but down here in the high 50s, and if you get to the mid to low 50s, I think it's a layup.
Yeah. Karen, what do you think?
I think I'd rather own Facebook, and I do own Facebook. I feel like it's a lot of the same bet, but at a much cheaper price, and much cheaper. And they've been able to, they haven't stumbled like Twitter does. The growth rate, I guess, is higher, but the value to me in Facebook, it's not even close. Google as well. So social media advertising, I'd much rather be in either of those.
I think that's an interesting way of regarding Twitter, and that is how else can you play the same exact trends but at a lower valuation, and do you get more optionality with the Facebook because of the other things that they own, like a WhatsApp and a Gram guy, which I know you're very active on?
Huge. I mean, I love the Gram for a number of different reasons. I think it's a great restaurant somewhere as well. Listen, I'm not on the Gram, number one. Number two, I get, Karen did the self would you rather. You didn't say a word. If Tim had done that, you would have fricasseed him. I get that as well.
Totally.
I'll say this, everybody's focused on daily average users. I mean, it's like, stop with don't get, I got a Muppet News flap.
So they're all talking about advertising. I think they're talking about advertising without even talking about Amazon here. Amazon has a chance to be one of the biggest advertisers in the world. I think they're already third biggest, and they're talking about Twitter's ad business. Like, I have a lot of respect to Twitter. I love Twitter. I cannot say that I own a lot of Twitter stock. I own much more Amazon stock. Amazon has much more potential and levers to kind of pull when it comes to advertising. They have a programmatic business. They have an affiliate business. There are going to be more interesting developments in the advertising space when it comes to what Amazon can do in compared to what Twitter can do. I think Twitter can evolve a lot as a platform. I don't think it can do as much in advertising that Amazon can do, at least for now. Maybe Jack has something up its sleeve, but I understand why Twitter is down after hours, and I'm kind of not surprised. I said yesterday how much I like Facebook in yesterday's stream, because Facebook was a company doing everything right in the advertising space. And I think Amazon has the potential to be one of those companies who's doing everything right in the advertising space. They have a lot of potential when it comes to also running ads on over-the-top and connected TV. Like, Amazon can do very good ads with their data. They know what people are buying. And if they appear in your living room and they target you properly, they can really succeed in the advertising business. I think they can help a lot of advertisers convert. So that's my take on Amazon's advertising business versus Twitter advertising business. We have 15 minutes until the Amazon earnings call. We are 15 minutes away from Amazon's earnings call, and I'm gonna put up CNBC again with the volume, and if they say something interesting, I'll jump in and comment again. But I think we're gonna wait until the earnings call. And if you have any cool questions or something, put it in chat. People, I am seeing everything. How many shares do I own? Great question. I own there we go. Now you guys know how much Amazon shares I own. I very rarely disclose how much stock I own, how many shares I own in a certain company. Um, Amazon is considered a big position in my portfolio. Not top three big, but big. I have probably more Facebook, Apple, and Store Capital. Not recommending any of these stocks, I just like those stocks. I'm not even recommending Amazon stock, I just like the stock. And if you've just joined us, Amazon did amazing on beat on revenue. Ignore what CNBC is talking about right now, Twitter. Amazon did an amazing job on revenue, hitting almost 110 billion in sales in the first quarter of 2021, and most likely to do way above 110 billion in the second quarter of 2021, especially if Prime Day is going to be in the second quarter. And if you are a first-time visitor to the channel and you enjoy my commentary and you checked out the video library and you see videos that you like, just so you know, I never will run on you any kind of ads. I will never try to sell you anything. Subscribe to the channel so we can grow this community of like-minded people who love public companies, love the companies behind the top stock tickers. I want to meet you guys on every cool earnings call. I want to do some workshops on the live stream. And the bigger the audience, the more we'll have interesting questions, the more we can engage. Loving the chat so far. Okay, I see Gene Munster is talking about Amazon. Let's pump his volume up.
It's going to happen in retail over the next 5 years that we're going to be talking about. And I think what is happening in retail in the home is kind of going back through the door. Amazon leaves it at the door, going back through the door. I think is a huge opportunity you're going to hear more about.
Gene, the market can be extraordinarily fickle. Having done this for a while, it humbles me every day. But last quarter, I thought was, for Amazon, was as good, maybe slightly worse than this quarter, but it was an exceptional quarter. Stock traded up to 3,400 in the after hours, and a week and a half later, I think it had a 2,950 or a 3,000 handle on it, for no apparent reason that I could ascertain. Obviously, a much different story now. What was I missing then that the market is seeing now?
I think what you're ultimately coming down to is what is the true growth rate? I mean, you've been covering this well this entire week. It's been the A topic. What is the true growth rate? I think what we're seeing here is maybe, in my view, it's that the growth rate is more sustainable. We look at the 5 big companies that have reported this week, and there's some pretty strong debate about which one of those companies are going to have sustainable growth. And so I think what maybe the market has missed, or I'm looking at from today going forward, I think Amazon is going to continue in this high 20, low percent growth, even up against these massive comps. And ultimately, what is the valuation, the correct valuation of that? I just believe it is higher than it is today at the 1.8 trillion.
Gene, always good to get your analysis. Thank you. Gene Munster of Loop Ventures. All right, so you have the earnings report, and that's one thing, and stock reaction can be something entirely different. We have seen very, very different reactions to very good earnings reports, I should say, the next day. And I'm thinking of, let's say, an Apple. Great quarter, solid quarter. Today, the action was meh, right? Facebook, great quarter, great action. Alphabet, great quarter, great price action. The list goes on and on, Guy. You can post a great quarter, but if you've got a high valuation, you tend not to do so well the next day in this environment.
Yeah, it's fascinating. And we talked about Apple last night. One of the comments I made is I thought Apple, given that quarter, my assumption was it should have been significantly higher. And I guess the longer it didn't sort of test that, 145-ish level, the more it made you believe that maybe it was one of these good news, bad price action situation. To your other point, though, Facebook, I think it becomes sort of a math problem when you see some of the numbers they're putting up. So I don't know. Again, we've all been doing this a long time, and I will tell you, it never ceases to amaze me how sometimes the market reacts the way I think it should, and other times completely opposite. I will tell you that last quarter in Amazon is one of them, and clearly today in Apple is another.
All right, well, we will keep you posted on the Amazon conference call, which will kick off very soon. Meantime, coming up, the picks are in. The field is set for the CNBC stock draft. So did Team Seymour Alpha score a technical touchdown, or was it a Fibonacci fumble? The Chartmaster is here. He's ready to grade Tim's picks. But first, we've got another earnings alert for you. U.S. Steel on the move after reporting results. The conference call is underway. We'll bring you the details and a lot more when Fast Money returns.
Okay, so they're talking about will the stock trade higher tomorrow or not, and what happened last time. Look, Amazon has always been in a situation where the company is talking about spending and investing, and there's not a lot of money trickling down to the bottom line, and that causes a lot of investors pause. Like, imagine a lot of hedge funds that have the, money of teachers and police officers and firemen. They want to invest in companies who grow the bottom line. No companies that have cash. Maybe companies that will give out a special dividend. For example, Costco. They give out a dividend. Amazon is not giving a dividend anytime soon. Amazon is at least 10 years away from giving any kind of dividend. So I don't understand Guy Adami. They're on CNBC talking about why the stock went down. The stock went down because it's a growth story. And if it trades like a growth stock, these things will happen. Another thing that you have to take into account, Amazon is mixed between so many retail and tech ETFs. And when you're mixed between so many retail and tech ETFs, if tech goes up and there's a lot of retail ETFs being sold, stock is going to get mixed results. When a company is so divided between two different industries, I think it's going to be always this kind of push and pull because they're miscategorized in some ETFs. Let me know in the chat. Do you think Amazon is a tech company or a retail company? What are they more? Factual, if we go by the facts and revenue, I think they're a bit of both. AWS and the products that are sold are probably more or less the same amount of revenue on a daily basis. If you look at it on a day-to-day basis, they're not going to be far from each other. But if you had to choose one. Is Amazon a retail company or a technology company? Are you more of an Amazon client when it comes to buying their products or using their services? I think Apple is becoming more and more of a services company. I think their hardware is just a vessel for amazing services.
Welcome back to Fast Money. We've got another earnings alert. This time, U.S. Steel shares the metal maker on the move after reporting earnings. Let's get to Bertha Coombs for a breakdown of the quarter. Bertha.
Melissa, a mixed quarter for U.S. Steel, reporting $1.08 in earnings per share adjusted. That's well above the estimate for 91 cents. But the top line came in shy of expectations at $3.66 billion.
If you managed to hold until now, we are 5 minutes away from the Amazon earnings call.
Strong demand, the company says, and the recent acquisition of...
Gonna put the Amazon earnings call live in less than a few minutes. 5 minutes.
Adjusted EBITDA margin during the quarter. Interestingly, though, flat-rolled steel shipments in terms of net tons were down about 7% from a year ago, even as total shipments were up nearly 12%. And one of the other things that was interesting, I noticed on the balance sheet, the cost of sales was up 18%. Even as you have these record high steel prices, everybody's feeling the high commodity costs.
All right, Bertha, thanks. Bertha Coombs. Tim, I got to go to you on this. You've been hot on this one.
Well, you have a couple dynamics here. Bertha pointed out just that the tailwinds for the steel sector are enormous and demand remains very high. I think this was slightly disappointing when you're at 12-year highs on hot roll, cold roll steel, whatever you're buying. But if you look at something that I don't think people are talking about that was part of this release is they've announced a dividend of $0.01 a share. Now, no one's going to get rich on that. That's not going to attract dividend funds. But guess what? This was a company that everyone was worried about their solvency. This, to me, is a very symbolic victory. And this is a company whose balance sheet has changed dramatically in the last 2 years. Stock's up 200% going into this print. Expectations were high. $21, or I think it will hold $21. An uptrend very much alive. Environment will we have where commodity prices